Thank you everybody for being here. Thank you for attending this panel on DeFi. For those of you who may not be familiar, this is decentralized finance, meaning real world financial applications such as lending or trading happening without a bank or intermediary. So to give some context, previously to trade crypto, you had to use something like a Coinbase, and now you can use a decentralized option like Uniswap. Or similarly, previously to get a loan, you would need a brokerage or a bank, and now you can use Aave. So to take a step back, where are we now? We are at the tipping point of a financial revolution. There's now nearly $10 billion locked up in DeFi, and we can finally start to say that cryptocurrency is finding product market fit. So while $10 billion is significant, even in traditional financial terms, this is a huge percentage of the overall crypto economy. So if you've been in the industry for a while, this is massive. We've never before seen such a high percentage of users actively performing real financial actions, real transactions, investing. People call Bitcoin a store of value like gold. With DeFi, we're now actually seeing people put it to work to earn interest. My name is Shannon Wu. I've been publicly advocating for Bitcoin since 2012 as a student at Stanford. In 2013, I sat on Stanford's board of trustees, and shortly after, I started working full-time in finance and tech, first in venture capital and then later in consulting. I was one of the first team members of MakerDAO where I oversaw the public launch of DAI, and I was a founding team member of data verification protocol Bloom, where I led the go-to-market. Most recently, I founded Identity Review, a global consortium. Identity Review works closely with major world governments and banks with a focus on the data economy. So we have an incredible panel today of some of the key leaders driving this space to the next level. And I want to kick off this panel with 3 trends that are happening now before we turn it over to questions for our panelists. The first trend that's happening is traditional finance is being ported to decentralized finance. The first DeFi tool we saw was trading. This is peer-to-peer trading, and this was core to cryptos because you could trade your crypto without a middleman, but it's so much more than that now. People are lending, they're borrowing, they're trading, they're earning fees from supplying liquidity. There's real finance happening. Everything from people locking up their Ethereum to get stable assets, to getting extra leverage and exposure to multiply their risk and returns. Any way you slice it, this is really, really exciting for the space. So before, you had to trust central parties to lend to you or provide leverage or even to trade for that matter. But all of these things are now coming to DeFi, and many are already here, and there's still a lot left more to come. So from real world assets on chain to derivatives, the DeFi space is just now getting started, which is very, very exciting. The second trend I want to share is that a higher and higher proportion of the crypto market cap is now being used for DeFi. So this is a very, very exciting component of what's happening right now within the crypto market. 25% of Ethereum's market cap, which is $40 billion, is locked up in DeFi. So that means 1 out of every $4 is being put to work in DeFi right now. And so when we say locked, what we really mean is put to work, and 25% of all Ethereum in circulation is being actively utilized inside of DeFi projects. So with Uniswap, referring to trading, and Aave, which is lending, these are the 2 biggest projects right now as far as total value locked. So the third trend is this is just the start. This is all very, very exciting, but we're very, very early. All things considered, $10 billion, it's a big number, but it's very small compared to the overall market size of, say, just looking at lending. Looking at lending alone in the US, personal loans are over $140 billion, and globally they're over $6 trillion. And so the total addressable market of DeFi isn't just decentralized niche finance. Crypto has the potential, and probably sooner than we think, to expand beyond just classic crypto markets and into real financial markets. We're starting to see this early signs of mainstream interest in the space, but the ad hoc nature, the high gas fees, and the really confusing user experiences are still holding up a major wave for both retail and traditional institutions to hop on board. With Identity Review in particular, we're working to bring in real banks, real governments to decentralized technology and beyond. I've personally spoken with CEOs of top 10 banks, heads of state, and with world banks about crypto and DeFi, and they're just now starting to finally see beyond Bitcoin and realize the potential there. Which is why a panel like this is so important. So it's a very, very exciting time. Thank you all for being here. And we have a very, very exciting group of people on our panel. And I'd like to ask some questions to our panelists. And first, let's start off with a round of introductions.
My name is Stani. I'm the founder and CEO of Aave. And Aave is a building a decentralized money market protocol on Ethereum and contributing to this building of this protocol. And as a decentralized protocol, it basically runs on the Ethereum blockchain autonomously. And as a application, what it does, it allows users to permissionlessly deposit cryptographic assets, Ethereum-based assets, such as Ethereum stablecoins, and earn interest. And once you have deposited those assets into Aave protocol, you can draw a credit line from the protocol and borrowing some other asset, for example, or you can delegate to someone else you trust or to another smart contract. And we started Aave actually beforehand. We were called ETHLend. We started to build in 2016, and we launched actually the first lending protocol on Ethereum back in beginning of 2017. So we have been quite long time now in the space, and the Aave protocol itself has been launched beginning of this year, January, and it has grown quite substantially since then.
Thanks for having me, Shannon. Super happy to be here and talk a little bit about Chainlink and Linkpool. I'm the business development lead at Linkpool. I also handle some of the infrastructure and product-related duties as well. So I tend to think about DeFi and Chainlink in a business sense, but also, get my hands dirty doing some of the actual infrastructure and node operation side as well. In terms of Linkpool, Linkpool is we started in 2018. We're a node operator and infrastructure provider that focuses exclusively on supporting the Chainlink network. There's lots of validators and node operators out there that support many other networks, and we're a little bit unique in that we just focus on the Chainlink network. For anyone who doesn't know, the Chainlink is a decentralized Oracle network that provides real-world data to blockchains. Blockchains themselves can't see the outside world, so they don't have access to any kind of data that exists in traditional systems or markets. The blockchains themselves need to rely on what's called an oracle to be able to deliver that information to the network, and that's what Chainlink does. Chainlink does that through decentralized Oracle networks, so a whole bunch of nodes that all go out and fetch data from traditional API sources, premium API sources, does some aggregation and puts that information on chain. And so right now, Chainlink has over 50, it's probably getting close to 100 now, of these different data feeds or different data sources available on Ethereum. And that spans from, crypto prices to Forex and commodities and even things like, transaction gas costs, so that when there's market volatility, smart contracts can punch through that volatility with the optimal gas prices. That's a little bit about Chainlink.
I'm Nevin Freeman. I'm the co-founder and CEO of a project called Reserve. And Reserve is a decentralized stablecoin. And it has sort of two main objectives. So one objective of the project is to produce a cryptocurrency that maintains its purchasing power consistently and doesn't get shut down in any way indefinitely, like over the next 100 years. And we think that actually a lot of stablecoin approaches won't achieve those goals, where notably, we also think that it makes sense today to peg to the US dollar, but in the long term, it probably doesn't make sense to peg to the US dollar. And so the Reserve architecture allows going off of that peg. And the second main objective of the project is to build liquidity for this stable cryptocurrency against really all of the fiat currencies in the world, including sort of the long tail of more minor fiat currencies and the ones that tend to go through, you know, hyperinflation or sort of more tumultuous times. I think it's really important for people that are holding those currencies to be able to trade in and out of crypto. So that's sort of, those are the two main objectives that Reserve is pursuing.
Question for the panelists. There's a lot happening right now with DeFi news moving at breakneck speed. The past few weeks alone, we've been seeing some really exciting things happening in farming with Uniswap's Uni. So for people who haven't been in the space, what should people know about DeFi?
People should understand and kind of like educate themselves and their friends and anyone they feel to about the value proposition of DeFi, in the sense that decentralized finance is something quite new in the sense that now something very decentralized in terms of finance could be done because of the way technology allows it to do. And one of the things is that in DeFi, it's very important that you don't give custody of your funds to anyone, your cryptographic assets, and you keep the custody yourself and interact with all these different kinds of smart contract without giving up custody. So that is the good value proposition of DeFi. And another one, of course, is that it's transparent in the sense that the ecosystem, whether it's DeFi or any other part of the blockchain, is actually completely transparent. So it's auditable by anyone who participates, anyone who wants to know what's going on in DeFi or elsewhere in blockchain. That is a big value proposition in that sense compared to black boxing and traditional finance. And third, which is very important to me, is the permissionless access, but rather actually permissionless access to build things. So anyone can actually build their own smart contracts, whether they're related to DeFi or not, and create new innovation. And this is the actual coolest part that is out there.
You know, when we think about, or at least when I think about DeFi, I think about how early we are still. You know, but the foundations are really being built, right? And although it's early, the pace of innovation, both on the development side, but also on the business side and building businesses around this, these primitives and opportunities, is really innovating incredibly quickly as well. You know, I'd also say that it's risky for sure. And those risks are really multi-layered, right? When we think about risks, we think about you know, smart contract risks, which isn't unique to Ethereum or any individual product or project. It's really something that, you know, applies to everyone. You know, I think that there's also product risk as well, right? And these are things like business models and liquidity and you know, just how systems are designed and that sort of thing. We're really seeing you know, risk associated with that. And you know, I think both Chainlink and Linkpool are doing some things to try and combat that risk for sure. And whether that's through awareness or mitigating those risks, or you know, decreasing the likelihood of them occurring, that kind of thing. I'd also say that DeFi is not for everyone yet, and that's okay, right? It's getting better every day for sure, and although it's not for everyone today, it's here to stay, and because it is, I think it's super important that people get familiar with it, right? Even if you're not participating, that the education cycle, I think it's important that it starts now.
What should people know about DeFi? Well, so I think one thing that we think about DeFi, which is maybe a little bit different from some of the narratives today, is that DeFi today fundamentally is still really almost 100% based around crypto speculation. So people talk about DeFi as opening up access to capital or making it possible to borrow money if you couldn't before, or things like that. None of that is really true as far as we can tell. DeFi is essentially a way of, it's a set of different, very interesting and cool, I think, protocols that allow crypto speculators to move their capital around in new ways, to trade peer-to-peer, to do sort of margin lending peer-to-peer, and create derivatives in a way where no single legal entity is sort of legally on the hook for whatever is happening in those marketplaces. And I think that that's both interesting and a bit scary. I think it's interesting because it means that people have felt free to innovate and experiment, sort of not being particularly concerned about regulations, because the fact that these protocols are running on public blockchains and no one feels particularly responsible for what's going on means that there can be sort of this unbridled technological exploration and experimentation with different kind of new types of financial interactions and instruments. But it's a bit scary because, if that gets big enough and the fact that it's unregulated or just really hard to regulate means that there could end up being really sort of surprising and problematic issues with liquidity, where people could end up losing lots of money and so on and so forth. A lot of the protections that are in place to try to stop that from happening, which obviously, we don't always stop it, even with regulation. We've seen problems in regulated markets, but I think in a fully sort of unbridled and unregulated market, it could be a big challenge. And so I guess I say those things just because I think that in the case of DeFi today, there's clearly a bubble type situation happening. So like our project Reserve, we actually haven't done anything with yield farming, or you can't even borrow, you can't borrow our stable coin and earn a yield on it. Like in sort of no way are we actually directly connected to anything that's popular in DeFi, and yet our governance token 10x'd because of the DeFi bubble, roughly. I mean, we've been making progress, but I think it's largely because of the DeFi bubble. And I think that sort of goes to show that a lot of these appreciations in token values don't really have a whole lot to do with like fundamental value of what's going on. There's kind of just a lot of attention on one area in crypto. And when you have a lot of attention, a lot of people buy and the prices go up, and that's sort of self-fulfilling. So I just say this to kind of try to add a little bit of sanity to the conversation and try to remind people that there's a lot of narratives that get applied to areas of crypto when the prices are going up about all the value that's being created. And I do think that a lot of cool experimentations happening in DeFi, and I think that some of the things that are learned from this could end up being pretty useful to like sort of actual financial applications in the future. But I think those are some thoughts that I would want people to consider, and some things I would want people to know about DeFi right now.
We have a long way to go with a lot of exciting progress being made. What trends are you guys seeing over the next, let's say, 1 to 2 years, and what will be their impact?
Yeah, I think what's interesting now is that there has been more interest towards, like a general interest towards DeFi and from the blockchain space, and it actually starts to get more and more traction. The space is still very small compared to any kind of like traditional finance out there in a global scale, but it's now getting driving more people to try it out and see like what kind of benefits you have there, and build new innovation. I think once the protocols that are out there, including Aave, are growing over a period of time, they become more battle tested, and in some sense it drives more adoption when the smart contract become kind of safer. They have been longer on the mainnet, and they are functioning well. And also as the liquidity grows and the ecosystem grows, more and more of the baseline protocols will be used. I'm very excited about things like A tokens that we have at Aave, where you can, when you deposit stablecoins into Aave, you get this kind of like a token that represents your deposit and also your earnings from the protocol. And that is a kind of like ability to have a global savings account in USD nominated in permissionless fashion, which helps a lot of people globally who are suffering from, for example, high inflation or inaccessibility to a banking system, or actually like yields. And that is very interesting, because with those A tokens, you actually do not need to deposit to Aave. You can just buy them from somewhere, and you have this savings account. And I believe that this functionality will actually expand to other places as well, that you can actually have this kind of like exposures and positions by just holding a cryptographic token.
Yeah, 1 to 2 years is, it sounds like such a short period of time, but it's so fast. You know, I think about crypto in dog years, right? Where every day is like 7 days in the crypto space. So 1 to 2 years is seems like a short period, but it's really quite long. You know, I think that the near term things that we're going to start to see are, you know, layer 2 solutions obviously start to materialize and make their way to production and hopefully be used a lot. And you know, specifically with DeFi, I think we're going to start to see that translate to other networks, other chains, that kind of thing as well. You know, when I think about layer 2, the solutions that come to mind for me are Loopring and you know, Optimism, and specifically for Chainlink, Arbitrum through Off-Chain Labs. You know, there's some really great layer 2 solutions coming out, and you know, I think that that's just going to change the landscape really quickly. I think about other networks, you know, Chainlink's already starting to expand past Ethereum onto these other networks that are, you know, hungry and they want to participate too, and they need a good Oracle mechanism to be able to compete and to do so securely. So, you know, Chainlink's already starting to spread to, you know, Matic and Polkadot and Tezos and Binance Smart Chain, and you know, there's a lot of integrations that are in the pipeline. And so you know, I think that there's going to be a lot more, specifically for DeFi. I think there's going to be a lot more assets that are available. You know, I mentioned earlier somewhere between 50 and 100 Chainlink feeds or you know, prices or data sources that are available online. You know, we're really, you know, especially when we look 2 years out, the number of assets that are available to platforms to build with and upon is really just going to, you know, grow significantly. And that's an area that we're, you know, as a node operator, but also, you know, part of the Chainlink ecosystem, that's an area that we're really trying to push. And, you know, I think that, you know, as more and more data sources become available, it's only going to increase the innovation and ingenuity of these teams as they're building products and thinking how to, you know, push the DeFi space forward.
I think one really interesting question that we're going to see play out over the next 1 to 2 years in DeFi is, you know, with incentivized liquidity, right? You're essentially paying people to make markets, to offer liquidity in order to bootstrap new exchange marketplaces, which is pretty cool. Like it's pretty cool to see that play out. The big question is, when you stop paying people to provide liquidity, will you have created enough organic usage and demand for that marketplace that it continues to be attractive to provide liquidity without that extra incentive, such that you've actually gotten from no liquidity to a sort of sustained liquidity pool that will continue to persist? So it's tough to tell right now, because a lot of these sort of yield farming schemes are still playing out. There's still a lot of money being handed out to incentivize people to provide liquidity. And so over the next 1 to 2 years, it'll be really fun to watch, okay, once those tokens run out and we start to see what's, you know, sort of what's left in terms of that remaining liquidity. I personally believe that in some cases it will stay, and that will have been an effective use of capital to bootstrap that trading pool. And then in a lot of cases, probably it won't. And so that's the trend I'm personally the most excited to watch play out.
For Stani, we first talked over 2 years ago when Aave was called Eastland. And since then, you've seen exponential traction becoming one of the most used applications in crypto. So what has this growth been attributed to, and where is Aave headed next?
I think it was 2017 or 2018 early when we met Shannon, and I think what's interesting back then was that the ecosystem hasn't grown that much. I mean, back in those days, there wasn't much functionality in the DeFi space. There was one decentralized exchange, and new decentralized exchanges were just coming into the space. There was Kyber just launched, Uniswap didn't exist, and the ecosystem started to grow. And once there is more liquidity in assets and also stable coins came, it created more demand for lending services, because now you had assets that you could use as a collateral, and you have actually also stable coins, stable value that you can borrow or deposit and earn yield on them. And that is something that kind of like gave a lot of traction to lending protocols. And what we decided to do between Eastland and Aave, when we rebranded, we wanted to bring a new protocol that is actually a pooled model, inspired, for example, by Uniswap and all this like pooled liquidity models, and at the same time kind of like allow unlocking value. And that's why we have actually different kinds of features like flash loan that allows you to borrow without a collateral, and also the credit delegation, where you can delegate your credit to someone else if you are not borrowing and earn more interest. So Aave is basically quite a lot about unlocking value, and that is what our users are doing, and kind of like the reason why they're using Aave. And we have grown quite substantially. I mean, the protocol has grown to quite wide extent now, and is one of the biggest protocols out there and the biggest lending protocol. And I think the success also bears to the fact that there's so many developers building on top of Aave. So we see every day and ongoing basis new interesting things being built, whether it's DeFi concretely or something else. And I think that has been a very big part of the success story.
For Nevin, just a couple years ago, there were few options for on-chain stability. And now stablecoins are becoming a critical pillar of DeFi and the broader crypto ecosystem for lending and beyond. What are major trends lately in stablecoins, and how can you speak to how Reserve is introducing accessible forms of stable assets for international markets?
Yeah, totally. So, I think sort of the most visible trend with stablecoins, of course, is lending and being able to earn a yield. And that's pretty cool. And then I think there's a further kind of important mega trend that is much less visible. And Reserve is not even actually that much a part of this other trend either. It's really the adoption of Tether, and I think now these days, I think it's safe to say USDC, amongst these large entities, individuals and companies that are using stablecoins to move capital around the world, to move capital usually cross borders. And usually in situations where there's some reason why it's hard to just make a straight up bank wire, whether there's a capital control situation or some other reason why, as a citizen of a particular country, maybe banks don't want to deal with you. And so if you look at the huge growth in market cap in Tether and USDC, there's sort of the visible story of well, they're being used for crypto speculation and crypto trading. But I think there's kind of this invisible tide happening where they're actually being used for more and more of these business and personal transactions and even store of value in some cases. And so this fits with the general idea that cryptocurrency is useful because it's sort of free and open and you can transact it peer-to-peer, but then also the fact that, in today's world, people want US dollars. It really just makes sense to use US dollars, not Bitcoin or other volatile cryptocurrencies. And so it's a pretty simple trend, but it's really meaningful, I think. And then as far as the question about Reserve and how we're providing liquidity in international markets. So Reserve today is focused primarily on Latin America. Our first largest focus is in Venezuela, but we also have service in Colombia and Argentina. And when I say service, what I mean is a consumer app. So we have a consumer fintech application that people can download on their phone, and they can trade in and out of our stable currency from the different local currencies. So for instance, with the Venezuelan bolivar, which is a very volatile currency, been through hyperinflation, can often lose like 5 or 10% even in a day or two. You can download this app on your phone and then trade from that currency directly into reserve dollars, and then you can trade back again anytime you want to. And it's obviously very difficult to make markets between volatile currencies like that. And so it's been quite an interesting task getting that off the ground. But we've seen an amazing, sort of population of people who are excited about this, which makes sense. And we're doing the work to try to make it fully accessible to anyone, even if you have no experience with cryptocurrency whatsoever, to save and then also to be able to spend your money in digital dollars. And so I won't talk any more about that right now, but if you're curious about it, HOLA Reserve, HOLA Reserve, is the Twitter handle for our Latin American account, and you can go there and sort of see the buzz of what's going on with that community.
For Ian, for the DeFi space to connect to the greater financial ecosystem, we can't be limited to siloed chains. How does Chainlink address the real-world data problem, and why is it important to set up Chainlink nodes?
That's something that both Chainlink and Linkpool will need to support. Earlier I mentioned that we're a Chainlink specific node operator. That's going to change over time as Chainlink's available on these different networks, right? We'll be running Chainlink nodes on those networks. So we'll certainly have a footprint on those networks, but it'll be focused and built around Chainlink and that functionality. I think beyond that, there's going to be, when we think about enterprise chains and private chains and that sort of thing, through integrations with things like Baseline, Chainlink will essentially become like an abstraction layer to be able to shuttle data and information and between chains and between systems, and that's really where the focus is. And it's important for the Chainlink node network to grow as well, right? And I think that's where Linkpool can really help here. We play an important infrastructure role in the Chainlink network, and I think that the network benefits as the node, the larger Chainlink network benefits as the node network increases. It increases decentralization. If people are thinking about running a Chainlink node, if you're an enterprise or fund or a large investor, we'd love to talk to you about our managed node service, or a retail investor, can use our node as a service when it comes out. Again, I think that being a node operator and running a Chainlink node is a super important part of the Chainlink network for sure.
Stani and Nevin, as successful founders in this space, what piece of advice would you give to aspiring entrepreneurs who are looking to build and contribute to this kind of financial innovation?
Yeah, I think one of the things, if you're building on DeFi or in general looking to do something, do it very safely and securely. So try to put as much as possible effort into security, ensuring that your application, your smart contracts are secure enough before going into the mainnet, meaning that there's a sufficient amount of audits, due diligence done, and different kinds of risk parameters are applied pretty well, because it takes so much time to build the whole ecosystem, but less time to actually kind of like ruin the reputation if these procedures aren't done pretty well. The permissionless building, which means that everyone can build, is amazing. That brings a lot of innovation. But when going live with so-called live audience in the main Ethereum network, it's very important to focus on the security, ensuring that the interactions are safe and funds aren't getting stuck anywhere. So that's definitely what I recommend everyone to do, because I know there's a lot of smart people here, and more smart people are coming, and they always find something interesting to build, and you just need to build that securely and with full passion.
I guess we'll find out over time if my perspective is right or not. But the piece of advice I would give is that in crypto in particular, crypto is super trendy. It's a very, very trendy space. You know, if you look back over the past few years, you can just sort of see the evolution of buzzwords. You can see, you know, what all of the, you know, different players in the space were orienting around at different points in time. And I think that if you look at the, you know, even if you're someone who wants to capitalize on those trends, I think if you look at the parties that were doing well at any point in time when a trend was peaking, it wasn't parties that were sort of jumping on that trend in the moment. It was the ones who saw it, you know, a year or more in advance, saw that opportunity and understood why it was meaningful, and then carefully built something that at the time most people thought wasn't interesting. So like even if you look back in 2017, you know, there's obviously a bunch of sort of trendiness with the ICO stuff, and there were some people talking about lending, and most people didn't get it. It's like, why would you want to borrow crypto or lend crypto? And then now you can sort of see like those people who had that thesis, you can see that all playing out now. So the advice I would give is don't look at what's trendy now. Try to think about the fundamentals of reality and what is needed and what is underappreciated, and find something that you can offer that's totally different from what anyone realizes is important today.
For Ian, what's one piece of advice you'd like to give to someone who is looking to enter the space through business development?
I always like to think about people that are looking to enter a space, or even when someone like joins a new company. I always like to, you know, tell people or businesses to look at the other examples that are out there, or whether that's a person or another company, and find the people that are moving fastest, and do everything you can to, you know, to take that model and implement it in your own system, but also do whatever you can to attach yourself to those people or companies. You know, you'll learn best through osmosis, and as they continue to grow, you will too. So, you know, from a business perspective, I would say it's, you know, networking is incredibly important. And then once you're in those networks, find the movers and attach yourself to them as best you can.
Thank you for your time, Stani, Nevin, and Ian. This was a fantastic panel. It's so exciting to be able to have you guys here. And thank you to everyone who's attending. My name is Shannon Wu, and please feel free to reach out to anyone on the panel if you have more questions. With the remaining time, we have a few more minutes for Q&A in the chat. Thank you for everybody for coming.